Hey guys, this is Rudy for Best Investor. Let's see what's going on here today in the news. S&P 500 gains 27 points as Occidental, ExxonMobil lead the oil stock surge. And IBM is also there, but I'm not too interested in IBM because IBM actually doesn't even know what kind of business it's in nowadays. Or so it appears anyway to me. So, for a change, investors aren't having a count on tech stocks. The S&P gained 27 points. The tech sector gained 0.5%, but the energy sector surged 4.1% after another strong day on crude oil. Utility and real estate stocks, the segments usually do well in a recession, but underperformed in 2020 so far. Energy stock in both the sectors closed higher, with DTE Energy up 6.3% and Iron Mountain up 4%. Is oil back? Investors are behaving that way. Well, we'll see about that. Tomorrow's another day. After falling sharply on demand and supply worries and the Friday announcement that President Donald Trump was diagnosed with COVID-19, WTI crude oil futures surged from a low of $37 to today's price above $41 a barrel. That's pretty good news for Occidental. Big oil won today with Occidental up 8.8%. Halliburton went up 7.4%. Those were two of the S&P's biggest gainers. More than half of today's biggest gainers in the index operate in the oil patch, including global giant ExxonMobil. ExxonMobil added 5.3% and reclaimed its place as the biggest oil company. I think its market cap today was about 149 billion, overtaking Chevron again, which is about 140, maybe 144 billion or so. Only one day after Exxon had fallen temporarily behind Chevron. Today's move higher in the oil sector came on a combination of things behind crude oil's move higher. To start, the oil prices were moving up on worries about oil and refinery production in the Gulf of Mexico and on the U.S. Gulf Coast, with Hurricane Delta expected to make landfall on the Louisiana coast on Friday, which is tomorrow. Additionally, the U.S. Energy Information, the EIA Administration Weekly Petroleum Status Report released yesterday offered some reason for optimism. U.S. oil inventories held steady, an important measure as demand falls coming out of the peak summer demand season. Well, we haven't really had much of a peak summer demand season, so that's probably a bit of an overstatement. Refinery activity increased slightly last week, while net petroleum products exports increased almost 10%, a sign that global demand could be ticking higher. Well, we have seen in the past, if you've been following my videos, you would know that China has been buying oil from Occidental by the shipping container load, tanker load, sorry. So oil demand is not necessarily down everywhere, and the U.S. is maybe leading the charge in terms of suppressing the demand as the global recovery kicks in. Today's OPEC report added to the mix, projecting global oil demand will grow for another 2 decades, and oil investors jumped back into the oil patch with both boots today. Whether the industry is back on solid footing or not remains to be seen. Global demand is still down some 9 million barrels per day, which really is nothing. And the risk for private oil companies is that state-controlled oil giants in OPEC, along with Russia, will use their pricing power to keep U.S. shale producers down while they are on the mat. We will have to see about that. Here's Exxon today, nice uptick, 5.2%. There's the market cap, 149 billion, edging up there. You know what's interesting about this is that Exxon's 52-week high is $73.12, and it's currently trading at about $35, so it's less than 50%, sorry, more than 50% down from its 52-week high, but it is making a bit of a comeback here. Chevron doing a bit better. Its 52-week high was 122, and 74 is obviously much more than 50% of 122. So Chevron's growth since the March crash, let's quickly see year to date. So in March, yeah, that's when it hit a low of 55, and up and down, a little bit up and down. Let's go back to Exxon for a minute here and look at it for year to date. Very similar. How about Oxy today? So nice uptick, 8.86%, closed the day at $11.18. Obviously, its 52-week low is $9. So good luck to you if you manage to get in on Occidental at $9. Currently, it's trading at $11.18, so it's up quite a bit from that $9 low that it set in March of this year. So that's a wrap, guys. I just wanted to share this quick video with you. Obviously, I was reading The Motley Fool. This is Jason Hall, the guy who wrote the article that I was referring to here. Anyway, a good day for energy investors. And on that note, I'll sign off and wish you well. If you like my videos, please subscribe. This is Rudy for Best Investor saying goodbye, and I'll see you soon.